Hi and welcome to the video. In this video we're going to explore how Japan's decades-old debt experiment became a warning for the world. For 40 years Japan has completely defied financial gravity. Just look at this chart. Even with debt towering at 230% of GDP, their bond yields stayed flat, almost zero. How? It was a perfect storm of zero-rate financing and deflation. While the debt piled up, the interest costs didn't budge. Investors saw it as a strange anomaly. But as we know, even the most stable anomalies eventually face a reality check. And here is the catalyst that broke the silence. Under the administration of Prime Minister Sanai Takaichi, Japan rolled out a massive and baffling 135 billion yen fiscal expansion. But look at where that money actually went. This wasn't productive investment to grow the economy. It was stuffed with political giveaways, rice vouchers, fossil fuel subsidies and cash splashes. The goal wasn't to boost productivity. It was simply a short-term band-aid designed to mask the inflationary pain of their own policies. The market's verdict was instant and violent. Just look at that vertical red line. Bond yields spiked to 1.9%. hitting levels we haven't seen since 1997. Economists inside Japan are now warning the country is flirting with a Liz Truss-style meltdown. Remember, when you've lived on zero rates for a generation, a spike this sharp isn't just a fluctuation. It threatens a cascading sell-off across bonds, stocks, and the yen. This volatility has triggered a full-blown identity crisis for the yen. For 30 years, the yen was the world's safe haven. When global risk went up, money flowed into Japan. It was predictable, it was safe, but today, that dynamic has flipped. The yen is behaving like an emerging market currency, volatile and vulnerable. It's stuck near 155 to the dollar, its weakest level in half a century. The danger now is psychological. If market confidence breaks, capital won't flow in for safety. It will flee, pushing the currency down even further. And here is the fiscal time bomb finally igniting. For 40 years, the old reality was comfortable. Zero rates kept Japan's interest costs flat and manageable at 10 trillion yen. But look at the new reality. With inflation driving yields up, the nation's interest bill is set to rise dramatically. IMF projections now show annual payments doubling by 2030 and quadrupling by 2036. The debt is no longer dormant. It is becoming impossibly expensive. And here is the harsh reality. There is no easy fix because the foundation itself is cracking. Japan is fighting a losing battle on three fronts. A shrinking workforce that drains the tax base, an aging society that drives up social costs, and decades of sluggish growth. Without credible reforms, the math just doesn't work. Analysts are now warning that Japan may face drastic choices not seen since the post-war crisis. Measures as extreme as wealth taxes or even freezing bank deposits. Now, if you think this is just Japan's problem, think again. The ripple is already reaching America. Here is the critical link. Japan isn't just an island nation. It is the single largest foreign buyer of US debt. Washington relies on Japan's constant buying of treasuries to finance its own government operations. So, here is the danger. If Japan enters a crisis, its appetite to buy US debt disappears. That sends a direct financial shockwave straight to the United States, driving up borrowing costs for everyone. This image says it all. The dam is finally breaking. For decades, Japan acted as the world's shock absorber. Its unique financial system absorbed global risks, stabilized markets, and kept capital flowing. But that era of exceptionalism is over. With this buffer gone, the global system has lost its cushion. Now, a financial shock in Tokyo doesn't just stay there. It ricochets instantly across the entire world, meaning the margin for error for everyone has just disappeared. Ultimately, we have to zoom out. Japan is just the canary in the coal mine for a crisis far bigger than any one nation. The entire world is entering a dangerous era where high debt and high interest rates collide. Look at the map. The United States has federal debt at 125% of GDP, where interest payments are now rising faster than defense spending. Europe is similarly burdened, having relied on artificially low rates for years. Even China is battling a slow-moving real estate crisis and massive local debt. The bottom line, the pillars of the global financial system are all at risk simultaneously. We have to look past the tickers and charts to the staggering human cost of this crisis. According to the UN, 3.3 billion people, nearly half the planet, now live in countries that spend more on debt interest payments than they do on education or health. This is the ultimate trap. As governments are forced to funnel more money into servicing debt, there is less room for critical social programs, leaving the most vulnerable populations to pay the price. To wrap this up, Japan is shaping up to be the first domino in a staggering $337 trillion global debt structure. With sovereign bond issuance hitting unprecedented levels, markets are becoming more volatile, more reactive, and more interconnected by the day. The global debt crisis isn't some distant storm on the horizon anymore. It's already unfolding in real time. Japan is simply the first major test of whether global markets are truly ready for what comes next. As we can see from everything we've covered in this video, the potential impact could be significant. As a Forex trader, I've always been able to lean on the yen as a reliable safe haven currency, offering opportunities for fairly predictable trades. But the ground is shifting, and that long-standing dynamic may no longer be something we can depend on. We've got no choice but to adapt to these changes. With that, I hope you've gained value from this video. If you did, please support the channel by giving the video a thumbs up, subscribe if you haven't already, and hit the bell so you're notified when I upload more videos like this. Finally, I hope you have a fantastic day.